Hi, everyone. I hope you're all staying safe. Welcome to Refinitiv LPC's Middle Market Weekly Videocast. My name is Diquez, and I'm Contributor Relations Manager. Now, for those of you who are listening to this weekly video for the first time, we recently started putting this together as a way to provide you with some market color that complements our data. We do talk to a lot of lenders out there, and we thought this would be very useful. So this week, I'm providing you with an update on volume and some pricing comparables because we've heard that lenders are starting to analyze new deals again. So let's first start with the state of the syndicated middle market. As you see here, we're now looking at the full effects of the pandemic in the numbers. In April, volume was down to levels that were lower than those we saw in early 2009. And also, we've been hearing that the deals that are out there will probably not close until third quarter. And that means that we're really not expecting any meaningful increase in volume for the rest of the quarter. In the non-sponsored market, you see that issuance collapsed in April. And what we did see, the deals that were taking place were small incremental loans, small add-ons. That's what we were seeing. And I talked to bankers that focus on the space, and what they told me is that they're very busy looking at the real damage on their non-sponsored companies, and they've also been working on supporting them. In many cases, this means that they have given them deferred payments, and in return, they're getting higher pricing. This is really interesting because non-sponsored pricing has been so low for so long. And one banker was telling me that they're really not getting a lot of pushback from issuers. Now, one form that they're getting higher pricing in the non-sponsored deals are LIBOR floors. And interestingly enough, one lender was telling me that a month ago, they were talking of LIBOR floors in the range of 0 to 25 basis points. And now that conversation is 50 to 75 basis points. Banks are also getting amendment fees. One positive thing that I heard about this market is that these are the companies that benefited the most from the Paycheck Protection Program. And this will allow many of them to stay afloat, but there's a lot of uncertainties out there. And will this be enough? Let's move on to the sponsored market. In this end of the market, the numbers are even worse. And this is not surprising. As the US remains in shutdown, many of these are dealing with zero revenues, and the future is very uncertain. So how do you underwrite a deal under these conditions? How do you syndicate a deal? In the direct lending space, there has also been very limited activity and the pipeline is thin. However, we've heard that more lenders are looking at new deals than what they were a month ago. Price discovery continues, though, and there are very few comps to look at. If you look at the next slide here, I show you some of the deals that have been provided by direct lenders. These are larger deals, but you can see that it shows pricing in a couple of them at LIBOR plus 700 basis points. We have New Start Energy at a 12% fixed rate. And we talked to direct lenders specifically about the middle market. And they say that they're looking at deals in the 700 to 750, 725 to 750 range. And some have even seen some deals closing in the 825 to 900 range. One conversation we listened to earlier this week was Aris Capital Corp earnings call. And they said the spreads today are about 200 basis points wide of what they were at the end of the first quarter 2020. And this is on regular first lien term loans that are not, for issuers that are not very impacted by COVID-19. However, for issuers that are meaningfully impacted by COVID, Aris said that lenders are achieving double-digit yields both in the middle market and large corporate space. We have some data on that, on the large corporate institutional market, and we saw 3 issuers offering double-digit yields at the beginning of April. Now, these companies were either gaming companies like Golden Nugget, it's a gaming and restaurants company, or they had their revenues tied to casinos. These deals actually got a lot of investor attention, and 2 of them were able to cut pricing during syndication. Now, after those deals took place, we have seen other single B issuers tapping the market, and spreads on these deals are ranging from 400 to 800 basis points. A couple of these deals backed acquisitions, so that is really good news. If we go up the rating scale and we look at double B issuers that have been tapping the market, we see that they've also had to pay up. And the same as with single B rated issuers, not only are they facing higher spreads, but discounts have also been a lot wider, and this has resulted in higher yields. So we will continue to provide you with more information as more deals hit the market. For now, look at the full middle market weekly report in Loan Connector, and you will find the comps that that back up most of these charts. Thank you so much for listening in, and stay safe. Bye, everybody.